Let's jump right into this explainer. Why exactly did European stock markets take a massive dive today?
What triggered this brutal, continent-wide sell-off? Let's quickly unpack the real data behind all this panic.
The data shows it clearly. Sellers completely dominated the broader European market. Almost no sector was spared. Looking across the top 600 European companies, it's literally just an absolute sea of red. But wait, surprisingly, Germany's DAX index emerged as a lone survivor today, actually seeing some strong buying. Meanwhile, France's CAC 40 faced a brutal reality, completely lacking any sort of buyer support. The damage is steep, continuous 4.3% drop straight down from its historical peak. And the UK's FTSE 100, well, it failed the 11,000 mark again, dropping over 1.3%. So what's actually driving this chaos? We can trace this panic back to 5 distinct macro forces. First, the AI life preserver. Nvidia's stellar earnings practically rescued major tech stocks like ASML and Infineon. In fact, this positive tech shock is exactly why the German DAX avoided the deep red today. Now for the headwinds. US inflation is stubbornly stuck at 3.7%, noticeably higher than expected. This makes central banks like the ECB super hesitant, keeping borrowing costs painfully high for European businesses. Third, falling crude oil prices are acting like heavy anchors, dragging down major European energy corporations. That heavy drag is exactly why the resource-heavy UK FTSE 100 suffered today's biggest regional decline. Fourth, a defensive pause. Massive investment funds are literally holding their breath for the Jackson Hole Symposium. Investors are halting large moves to avoid crazy weekend volatility before major Fed and ECB speeches. Finally, the Eurozone's internal health. Traditional manufacturing and consumer spending both remain noticeably, painfully stagnant right now. This economic drag absolutely starved luxury brands like LVMH and Kering, pulling the whole French market down. With these heavy macro anchors weighing down the market, you gotta wonder, is this just a temporary dip? Or are we witnessing the first undeniable cracks of a much deeper, longer Eurozone recession? What do you think?